Hey gang, Dennis Tubbergen here with another video market analysis. Today is Monday, April the 2nd. Hope you had a happy Easter weekend. Hey, on today's market update, I just want to show you something that really kind of crystallizes the direction of the US dollar here over the last 4.5 months. I have here the US dollar index, and these are all daily charts. Now, the US dollar index, you can go check out for yourself. The symbol is DXY. DXY. That's Delta X-ray Yankee. And if we just kind of take a look at what the US dollar has done from, say, the 1st of November through the present times, let's go back and just call that maybe 5 months or so. The US dollar index has fallen here from an intraday high of about 95 to about 90 right now. So let's just say it's down about 6% or so. And if you look at US Treasuries, which are also US dollar denominated, you see we've had another decline here from the high point here mid-December, about 128 and some change, down to 121 now, down about that same percentage. Interestingly, gold, not surprisingly, over that same time frame is up pretty significantly. Gold has gone from a low here of about 117 to a high of about 128. That's about 9.5%. So gold has actually increased its purchasing power as the dollar has declined, relatively speaking. This has been the case in just about every instance or every incident of currency devaluation. It was true back in the Weimar Republic when the German mark was devalued to the point of destruction. Gold continued to gain purchasing power compared to the mark. Putting money in gold prior to that currency devaluation would have made you wealthy. So looking at other items, corn, for example, a tangible asset. This ETF based on corn has gone from about 16.5 to about 18. So again, about that same increase. And if we look at a commodity index going from mid-December here, we're at about 15. It's currently at about 1680. So again, about the same percentage increase. The only thing that hasn't followed suit, and this should be a red flag, is stocks. If you take a look at stocks from about mid-December or so and look at it at the present time, stocks are actually down. And yet, stocks, commodities, the specific commodity of corn and agricultural commodity, gold, those are all priced in US dollars. And yet, gold, corn, and other commodities have increased in value, relatively speaking, as priced in dollars, as the dollar and US Treasuries have declined, and stocks have also declined. That should be a big red flag as far as stock valuations are concerned. We've been talking about it for a long time. Stocks are extremely overvalued, and the rest of the world is quickly moving to find alternatives to the US dollar, and that's being reflected in the prices, priced in dollars of course, of commodity items and tangible items that are priced in US dollars. So moving ahead, as we've been talking about, it's really smart for everybody to think about having their assets divided into two buckets. One bucket to protect against inflation, another bucket to protect against deflation. That's today's video market update. It is April 2, and I'm Dennis Tubbergen.